Are you tired of constantly worrying about liquidation prices when trading on Binance futures? Well, there's good news for you. Binance has introduced a new feature called Isolated Margin Mode that allows you to trade futures contracts without risking your entire margin balance. In this video, we're going to take a closer look at how you can use Binance's Isolated Margin Mode to trade futures contracts with zero liquidation risk. Firstly, let's take a step back and understand what liquidation is. In the world of futures trading, liquidation occurs when the price of the asset you're trading falls below a certain level, known as the liquidation price. When this happens, your trade is automatically closed by the exchange, and you lose your entire margin balance. This is where Binance's Isolated Margin Mode comes in. By enabling this mode, you can allocate a portion of your margin balance to a specific trade, and even if the price of the asset falls below the liquidation price, you won't lose your entire margin balance. To get started with Isolated Margin Mode, log into your Binance account and navigate to the Futures tab. From there, select the contract you want to trade and click on the Isolated Margin Mode button. Once you've enabled Isolated Margin Mode, you need to select how much margin you want to allocate for the trade. You can choose a percentage of your total margin balance, and Binance will automatically calculate the maximum position size you can take based on your selected leverage. It's important to note that the higher the leverage you choose, the more risk you'll be taking on. So, it's always a good idea to start with a lower leverage and gradually increase it as you become more comfortable with the platform. Once you've allocated your margin, you can enter your trade as usual. But with Isolated Margin Mode enabled, you won't have to worry about liquidation prices anymore. Even if the price of the asset moves against you, you'll only lose the amount of margin you allocated for the trade. Let's take an example to better understand how Isolated Margin Mode works. Suppose you have a margin balance of $10,000 and you want to trade Bitcoin futures with a leverage of 10x. You decide to allocate 10% of your margin, which comes to $1,000, for this trade. Next, you need to choose how much margin you want to allocate for the trade. You can select a percentage of your total margin balance, and Binance will automatically calculate the maximum position size you can take based on your selected leverage. Once you have allocated your margin, you can enter your trade as usual. But with Isolated Margin Mode enabled, you won't have to worry about liquidation prices anymore. Even if the price of the asset moves against you, you'll only lose the amount of margin you allocated for the trade. And that's it. With Binance's Isolated Margin Mode, you can trade futures contracts without the fear of liquidation. So, go ahead and try it out for yourself on Binance Futures. Happy trading! Binance will then calculate the maximum position size you can take based on your allocated margin and chosen leverage. In this case, the maximum position size would be $10,000, 10x leverage, or 1 BTC. Now, suppose the price of Bitcoin falls by 10% and the liquidation price is reached. If you had not enabled Isolated Margin Mode, your trade would have been automatically closed, and you would have lost your entire $10,000 margin balance. But since you enabled Isolated Margin Mode and allocated only $1,000 for this trade, you'll only lose that $1,000 margin balance. This means that you still have $9,000 left in your account to continue trading or withdraw. It's important to note that Isolated Margin Mode does not completely eliminate the risk of trading futures contracts. It simply reduces the risk of losing your entire margin balance in case of liquidation. So, always remember to practice responsible trading and never risk more than you can afford to lose. In conclusion, Binance's isolated margin mode is a great feature for traders who want to trade futures contracts without the fear of liquidation. By allocating a portion of your margin balance to a specific trade, you can limit your risk and trade with confidence. We hope this video has been helpful.